I made $13,000 day trading and I didn't trade more than 1 hour per day. And in this video, I'll show everything that I didn't understand, the full process that took me from nothing, from not being able to trade consistently for over 4 years to having my first 5-figure month. And my name is Daniel. I moved to Dubai at 19 years old, and this is an image you can see from the first day I arrived at my balcony. And the process that I've taken, the process that I will show to you today, is the exact same process that 2 of my students that I implemented together with them. Here we have Alex, who in just 5 months, he knew the basics, he knew the technicals of trading, and in just 5 months with implementing this full system into his trading, he got his first ever payout and is now trading 50K accounts, multiple 6 figures, and is pacing toward his first 5-figure month. And here we have Jacob, who started from zero. He didn't even know what a candlestick was. And just 6 months in, from starting with the full system, the process, the protocol that we implemented, in just 6 months, he got his first 2K payout. And this is me. I started my trading journey at 15 years old. This is back in 2020, as you can see right here. And as I said, it took me 4 years until I had my first consistent and even profitable month. It took me 4 years of finding consistency in my trading. And this is an image of me back in 2024 when I tried to understand how my good trades looked and how my bad trades looked, to try and find what I did wrong and what I could improve. And this is also the whole system that we will talk about today. Because the thing is, back here, I always understood the technicals of the way I was trading very quickly. That was never an issue of mine. And I could always take the right trades. Like, that was not my issue. If we looked over the week and month, I always took the right trades. I took the good trades, the best setups, right? But I always took so many trades that I should never even have looked at. And I couldn't understand why. I kept saying to myself, kept thinking, just be more disciplined, Daniel. Like, just be more disciplined and follow your rules. And this is what I got wrong all this time and what stopped me from actually finding consistency in my trading and in my performances. And it wasn't until I understood the 2 things that I will talk about today. Number 1, what I understood and what I will show you today. But second of all, how to implement this whole system and process that I will show you in the right order. And this is the exact process and implementation that made it possible for me to make $13,000 in 1 month trading and not even sit more than 1 hour a day while doing it. And my trades used to look like this. Here we have a square, here we have a circle, here we have, I don't know, a diamond, and here we have a triangle, right? My trades used to look like this. And there are 2 problems with this. The first thing is I was never an expert at one of them. This is a reversal trade, this is a continuation, this is a trade that's taken in the middle of nothing, and this is just a random trade, all symbolizing a different type of move, a different type of market move. And the problem here is that I was never an expert at one of them. I was 25% here, 25 here, 25 here, and 25 here. And the second problem that I faced was that I consistently had inconsistent input. And we all know that if you have inconsistent input, you will guaranteed have inconsistent output. These are the results you get in your trading. So these are the 2 first and main problems that I faced during all of these years. I kept taking different trades. If you looked at my past 10, 20, 30 trades, they would all look different. A few would look like this, a few like this, a few like this, and a few like this. None look the same. Because if we look at the grand scheme of things, if we just zoom into what is actually trading, trading is only about having an edge. Okay, an edge means that you have a statistical win or statistical edge. You are proven to make more than you lose over a certain time period. It's about having an edge and executing it consistently. This is the key word. Because having an edge is one thing, but following it and executing it consistently is the second thing. And that is what makes a trader profitable. Because my favorite formula in trading, and the one that I always keep in mind, is this: consistent input equals consistent output. Okay, like, this is just a fact. If you do what your edge tells you, the edge tells you that you will get the result. So you just have, your only job as a trader is to follow the process and protocol and the rules that your edge tells you to follow. Like that is literally your only job as a trader. Now, my weeks used to look like this because keep in mind, if we look back here, at this time, all of this, I used to have one good week, maybe 2 good weeks, green weeks. You felt like, oh wow, I'm knowing something, like I know what I'm doing. And following by 1, 2, 3, 4 weeks, maybe 5, 6 weeks in a row, pure losses, red weeks, not knowing what you do, going down this mental spiral, this mental path of just doubting yourself, feeling like you know nothing, being alone in the journey, making you feel like, wow, I have no one to talk to. So you keep going down this mental loop, this mental rabbit hole, as I like to call it, just talking negative to yourself, putting yourself down because you don't know what you're doing wrong. Because again, you don't have anything proven here. It's so inconsistent, everything you do, that you cannot even pinpoint a reason. And this was the exact reason why it took me so long. I couldn't pinpoint my issue. You keep thinking it's discipline. But the problem with discipline, and this is one of the biggest myths that I see a lot of traders and even mentors say, which I think is so inaccurate, is they just say, just be more disciplined. But first of all, if your trading looks like this, the first question is, what should you be disciplined to? Let's say you are going to run, right? You're gonna run a marathon. You make a plan on how to run the marathon. You know, 3 to 6 months in advance, you start planning for the run, right? You plan, yeah, these weeks I'll run this amount, then I'll increase it step by step. Then you know that you have to be disciplined to the rules you set out. You have to follow the guidelines that you just wrote. Now you know what to be disciplined to. But the problem is, if you don't know what your trading should look like, if it looks like this, then what should you be disciplined to? There's nothing you can measure being disciplined to or with. And the second thing is that when you're trading in these environments, especially when you're down here, when you're in a path like this, your mind very easily gets emotionally hijacked, okay? And when your mind and brain gets hijacked, what happens is that your survival brain kicks in, okay? This is your survival brain. And it only has one job, because the survival brain doesn't know anything. It thinks that you are in a threat. It thinks that the only thing, or it thinks that it's life or death, okay? Life or death. Meaning that it doesn't give a damn about being disciplined. It just wants you to stay alive and keep you alive. All the logical thinking, all the rationality that we have in our brain gets shut off because it has to focus on keeping you alive. So let's now go into the solution to this. Like, what actually made me go from this trader, inconsistent input, inconsistent output, and being mainly in this loop. A good week, maybe even a good month, followed by 5 bad months, okay? What took me from that to having my first 5-figure month, where I made $13,000 right here, as you can see, where I made $5,500 on my personal live trading account, and here I had a $7,500 payout. Because the thing here is that what I did here, what took me from here to here, was not just a single switch. It was starting to implement a full system to my whole trading, from the technicals to the execution part, to the data collection, to the improvement optimization of my trading, but also to the mental part, to the psychology, which is the biggest part. But today we will not cover the psychology. And this, the nice thing, the funny thing here is that the exact same thing that took me from 0 to my first 5-figure month is the exact same process that will get me my first 20K month, what will give me my first 30K month, 50K month, and even my first 6-figure month. I don't need to change anything, because with trading, once you have a statistical edge that works, once you know how to operate on it, and once you have systemized, which we'll talk about today, your whole trading, the only thing trading comes down to is what? It's leverage. And leverage in trading equals more capital. Okay? So this is another topic. How do you scale your trading? And this is a constant process. But the thing is that what you scale your trading on is the exact foundation that we will build upon today to get to this level that you want to, okay? So that's the thing, that's the beauty of what we will create today. The only way in trading that you can have consistent input, okay? This is the word we'll talk about a lot today, is if you can define the whole trading approach from A to Z. Because the funny thing with trading, and I know that you have realized that at this time, is that trading is literally the only occupation in the whole world that has zero rules. Literally zero, okay? You are playing in a playing field with zero rules. You have to create your own rules in a game to survive. There's nothing like that. No sport, no job, no nothing. We have to create our own playing field in a way that we can follow it. Because that's again the thing. It's not about having rules in your mind. Then you will end up just like this. You will have 4 or 5 different ways of trading. So the first thing we need to do, step number 1, is to define our whole trading from the moment we get to the charts to the moment the trade is over. This is a complete process. This is viewed like a timeline. Here you get to the chart, okay, right there. And here you have taken a trade, it's materialized, and it's either a win, loss, or a break even. This whole timeline needs to be defined. And the reason for this is because this is the only way we can be consistent with what we do. We need to define what each step in the process looks like. Okay? If we cannot do this, we can never know if we follow our rules or not. Because we can all have rules on paper in our mind, but unless we define it, we don't have a structure to it. So what we need to do is we have to look at our trades, okay? We have to look at the trades we have taken. And remember, my trades used to look like this. This was how my trades looked, okay? I had a few trades like this, a few like this, a few like this, a few like this. I had to look at all of them, find which ones, first of all, do I as a person, as Daniel, prefer to trade. Because as a trader, you will have some ways of trading that you prefer, okay? A few trades will suit you more. They will feel more natural to you. Those are the ones you should focus on. And then I had to look at what trades gave me the best results. For example, what you will find is that, let's say all of these trades, 9 out of 10 are losses, okay? So this is an immediate, okay, these are not my types of trades. They might be someone else's, but not yours. So you have to find your specific trades. What do they look like? For me, what I found was that I only want to trade and I perform the best in market maker models, in reversal trades. My best ability is to spot the reversals. When is the market turning from, in this case, bearish to bullish? And I'm good at spotting this, so I can position myself as close to this line or circle as possible and ride the wave. These are my trades. Continuation trades are not my thing. I saw that I lost way too many of them. I was too unconfident. I was too hesitant with these trades. So these were not the trades I should have taken. Hence why this is so important. You have to look at your trades. This is the first step. So you can start defining everything around them. Because what we will do is we will reverse engineer these trades into a full process. So now when you know the type of trades that you want to use, right? What type of trade suits you the most? It might be reversals, okay? It might be continuations, then you focus on this part. Or it might be something else, right? And especially like when usually does your trades take place? Because keep in mind, with what we will create today, you won't need to look at the charts for more than 30, 60 minutes a day when you know this process, when you have nailed this process. You won't need to look at the charts for more than an hour a day on average. Yeah, some days might be like an hour and a half, but some days and many days will be 20 minutes, 10 minutes, and you are done, okay? So this is why it's so important to know this before we go into step number 2. Because in step number 2, what we will do is we will divide or define this into 5 different sections. As you can see right here, we have environment, we have the higher time frame, we have the lower time frame, we have the execution, and we have the risk protocol. Okay? What we do is we look at the trades that we have gathered from step number 1. And the first step of the whole process, because what we will do, just to be clear, we will put everything into a step-by-step process, that we will do in step number 3 here, but this is just for visual representation. We put everything into a step-by-step sequence, and what this will become, every step will become a door, okay? Envision it like a door. I think that's very good. You stand here, you start off here, okay? At door number 1. And since we start off, we'll go into this, of course, we start with the environment. What is the environment? There's an environment in the markets, but there's also an environment that you are based in, mentally, physically, because you shouldn't trade anywhere, okay? So you start at door number 1. Based on what you see on the charts, based on what your protocol says, if, let's say you're at step number 1, you say yes, step number 1 is green, check off. What happens then? Well, this door will open up, so it will move. You will proceed right here to door number 2. And you repeat this process until eventually what will happen, you'll go so narrow until you get to the final step, which says what? It says execute. And then you take the trade. So what we have and will create here is a full roadmap, a full journey of how you take each trade. And this way you will never take a trade that you know you shouldn't take. So let's dive into each part here. The first one is the environment. This is crucial because if you're trading in an environment that is not an environment to trade in, okay? If you're trading in a market environment that you shouldn't look at, doesn't matter what you see on the higher time frame, doesn't matter what you see on the lower time frame, doesn't matter how the entries look or what you risk. The probabilities are shrinking a lot compared to what environments we want to engage with. That's why it's step number 1, and I would argue the most important, because you will find that when you engage in environments you shouldn't, you will have the most losses. The first and most important way of looking at environment comes down to this. And if you haven't seen this, well, then I will introduce it to you. This is Forex Factory, the economic calendar. This is crucial. You need to know how the calendar look for the day, for the session, and for the week that you are trading. This is like your roadmap to anticipate and understand when the market will move, when things can occur, when things cannot occur. For example, one of my rules, because one of the first steps in my protocol says, can you trade today? Okay, can you trade today? And this of course has a definition. So I have defined the rules that will tell me when I can trade and when I cannot trade. If we look at this calendar, for example, I am not allowed to trade the day in advance of NFP, right there. This means that immediately looking at the economic calendar, Thursday is a no trading day for me. I know that I cannot trade Thursday, the 6th of August. So let's say that we were on the 6th of August. I know that I cannot trade today, okay? So that is the first step. And here I want you to look at yourself. And again, going back to the trades we found from step number 1, how do they look, okay? What do they all have in common? What does the common environment look like when you have wins? What does the common environment look like when you take losses or bad trades or you don't perform? Might it be about sleep? If you don't sleep more than, let's say, 7 hours a day, you know that your performance is way worse than when you sleep more than 7 hours. Well, then you have to implement and add that step into the environment protocol, into the environment section. So how this works is then, let's say now everything is green, checked off, checked off, checked off. Once everything is checked off on section 1, we can proceed to section 2, which is the higher time frame. And again, the exact same logic applies to when we were on the environment, because now everything below or to the right of higher time frame, is literally, or it literally has no voice, it has no impact if the higher time frame isn't defined and if the higher time frame isn't clear. So it's the exact same journey. Here we have to know, okay, on the higher time frame, are we going higher? Are we going lower? Okay, where can we go to? Okay, we know we're going higher, right? For example, personally, I always, or at least most of the time, I have a few different protocols that I follow. I always want to trade in line with the higher time frame direction. If I know that on the hourly, on the daily, we are bullish, we're going higher, I don't want to trade shorts. I don't want to take shorts if I know we're going higher. So that is one example of how you can look at the higher time frame, right? So you define what's the order flow, where are we drawing towards, what's the drawn liquidity, okay? Another very important one, where can we trade from, okay? Because you don't just want to drop into the lower time frame anywhere. Where is your higher time frame? And this is important definition, higher time frame, drawn liquidity. Sorry, higher time frame point of interest. Where will you take the trade from? So this needs to be defined and met. Not just defined. We have to have reached the higher time frame point of interest before what? Before we drop into the lower time frame. Because what you don't want to do, and this is, for example, one of the mistakes one of my students made in the beginning. He was sitting on the 1 minute chart, skipping this step, just sitting here, looking at every single move. And I promise you, if you for an hour look at the 1 minute chart, you will see so many setups, so many patterns, and you will be so mentally drained. Whilst in reality, you had nothing to do on the lower time frame and no trade to take. So this is step number 2 in the protocol. You need to define all of this. And before we get on to the lower time frame, and before I show you this thing that's very important, this step right here, the higher time frame, from my experience of working with traders and seeing so many traders, this is the absolute number 1 reason to why traders pattern trade. Pattern trade means that you just see one of the things that you need to see on what? On your lower time frame protocol. You just see 1 or 2 things there you think you can enter, but you have forgotten the whole narrative, the whole logic to why you should even possibly take the trade, both on the environment and both on the higher time frame. Because yes, you will see bearish patterns, you will see signs saying lower on the 1 minute chart, but in reality, the hourly chart is drawing higher. So this is just a small move before we continue higher. You might take the short, right? A pattern short. You go short, the market just does this and then boom, it goes higher. So this is the most important step, that you have it clearly defined, clearly written out, and defined in a way that's objective. Because now the framing and structuring of each specific step is crucial. Like, that's everything, because you can make this in a good way or a bad way. Okay, if you make this and if you frame it, first of all, bad, and if you structure it in the wrong way, where you put things in the wrong order, what will happen is this will not help you. You will feel confused and you will be lost. So the most important thing here, the framing of each question, of each step, because how we frame each step is with questions, okay? You have to frame it with a yes or no question. And the yes or no, depending on the question, opens or locks the door to proceed or to stay where you're at. To give you an example, if we look at the higher time frame, first of all, I need to define what the order flow is, just like I mentioned to you. Okay, that would mean my first question is, have you defined the higher time frame order flow? The question is either yes or it's no. Okay, if it is a yes, good, then we proceed to the next step. If it's no and I don't know what the higher time frame order flow is, which can happen some days, I do nothing. I cannot go into the lower time frame, I cannot go into the execution part, and I cannot take a trade. So here, let's say it's a yes. The next question then becomes, because obviously we have to define within each question, how do we define a yes and how do we define a no. Otherwise, we'll just go off a feeling, and that's not what we do. So I have defined my higher time frame order flow. The second question is, are you looking for a trade, or let's say this would actually come later on. But then one of the questions, because remember, I want to trade in line with the higher time frame order flow. So when we get closer to the execution, a question would be, is this trade in line with the higher time frame order flow? Yes or no? Yes means I can proceed and eventually take the trade. No means, okay, I have to wait and I cannot take a trade. So the framing is crucial, okay? And then once the higher time frame is defined, we know what we're looking for, we know where we're looking at it from, where we're drawing towards, and so on. We go into the lower time frame. The lower time frame can be summarized into these three things, and I hope that you can see what I've read down. I've read down the entry, the stop loss, and the target. First of all, we need to define where can we enter? How does our entry pattern look? What is valid for us to enter a trade? Is it the first CST, the first break of structure? Is it a specific pattern you see in price? Is it something related to time? What is your exact entry definition, right? And this is something that's very individual. Again, we are all different. And that is why learning and implementing this is crucial, doing it the right way. For example, with Jacob, we implemented it a certain way. With Alex, a different way. That is why having someone to help you implement these things with is very important, who knows the structure and knows this. Once you know how you can enter, we need to define how do you define your stop loss, your invalidation level, which is very important. If you don't know how to define your invalidation level, well, you will always be taken out before the market moves. And here we need to know, okay, the question might be, do you have an invalidation level? Because there might be some trades that you don't know what is the invalidation level. There isn't one. Well, then you cannot take a trade, okay? And the same goes for the target. If everything has been done right here, you will have a first target, because the question has to be, do you have a first target? So you know where you can trade to. We are always objective. We don't go off feeling. We want to leave as much room, or we want to empty as much room for feelings, emotions as we can. And we want to take away as much as we can, so we can do one thing, focus on performing and executing the plan. And the plan is exactly this process that we are building together. Once the lower time frame is clear, you have checked everything off, it comes down to the execution. Now it's time to execute a trade. And one of the things here, it's a bit different. You can choose, of course, based on who you are, how you want to trade. Where do you like to enter? If you remember what I told you earlier on, let's see where we drew it, right here. I want to position myself as close to the reversal point, to the SMR, as I possibly can, okay? This means that for me, I am only allowed to enter within the SMR or within the low risk buy or low risk sell, meaning the first buying or selling opportunity after the SMR. If I miss one of those moves and price is somewhere here, I'm not allowed to take a trade. That is just according to my rules, because I've seen that my best trades all are entered in this area and my worst trades are in this area, okay? So that is the fourth section. You need to define, what does an execution look like? What is valid for you to execute off, okay? It could even be markets. Are you only allowed to enter NQ? Are you only allowed to enter ES? Or do you enter sometimes Forex, whatever, right? And again, a very important thing right here on the low time frame, you need to add what times can you trade. This is crucial. You need to have, let's say, SMT. Is that present? CST. Has that occurred? Time. Is time present? Because if it's outside your time of interest, that's basically the environment, but on the lower time frame. Okay, that is also very important. I want to add that. So you need to define, when are you allowed to trade personally, and the way that I can only trade for less than an hour a day is because I only have a very narrow, very specific time period that I take my trades. Most of my trades are all within this time period. Okay? This means that every single trade, and again, every single trade, or I would say 90% of my trades, all align in this window, first of all. The second of all, or the second thing I want you to remember, and I hope that you're understanding with this, what we're doing here is we are going from this into becoming an expert at this specific trade. If I told you to look at a square 100 times a day, okay, you could spot a square within literally 2 seconds. And what you will notice when you are doing this correctly is that eventually your exact trade, envision it like the square, okay? Your exact trade, you will be able to spot it within seconds. And when you see that it starts to look like a circle, or it has any different shape than what you're used to, let's say it starts to, instead of looking like this, it starts to look like this, you can immediately leave the chart because you have nothing to do. And this is the importance. This is what makes it able, or what makes me able to literally some days within 5-10 minutes just say, okay, today's not my trading day, I will not trade, bye. And some days I sit for this hour. Some days I might even sit until 11, or maybe, happens rarely, but sometimes 11:30, okay? This is why you need to become an expert and a specialist at this specific window. If you look at this every single day, only focus all your energy on this, you'll become so good at recognizing everything and a specialist in this specific window. So you have to define your exact window as well. If you haven't defined one, and if you have questions, this specific window, if you extend it all the way here, so from 9:30 to 11:30, you will find the absolute best trades every single day in this window. Yes, there are of course setups that form outside this in London, in PM. I don't look at Asia. They will form, but it comes down to probabilities over the series of 100 trades. That is why we're building this. And now we come to the final step before we actually take a trade, the risk protocol, okay? And this is the most important when it comes to trading, because you can have an edge, but if you over leverage and you have a loss, you will blow the account. And if you don't manage risk properly, you will eventually never see any results. So what is, first of all, the amount of dollars that you can risk per trade? Let's say it's $100 per trade, okay? Now you know that. Then you have to look at how big is this, your invalidation level, compared to what or how many contracts do you need to enter with. Good, now you do that. If you cannot, if it exceeds, let's say you have $100 risk limit, your stop loss is 60 points, you cannot even enter with 1 micro because that would be $120, okay? So that is also something you have to define before each trade. We don't want to just go on feeling, risk 500 today, 1,000 tomorrow, 200 the third day. That is not what trading is about. And then we define, can I trade based on how many trades I've taken today? Personally, I only allow for 1 trade per day because my process, this whole protocol that I've built for myself is so developed, it's so, it's so niched and improved, optimized, that for me, I never enter a trade, get taken out and price runs in my favor. That doesn't happen to me. If I'm on the right side, with my whole analysis, I will take the trade of the day and I'm done. If I'm wrong with my analysis, I will take the loss and we will go lower if I thought we were going higher. I don't take losses because I get wicked out and then price moves. That doesn't happen. That is why for me, and the way I've developed my whole process and implemented everything, I only allow for 1 trade per day. That's it. Okay? So you have to look at yourself here. So now, once this whole process is defined, once we have done all of this work, okay, all the things we have talked about right here, and I'll delete this so we can let our eyes rest a bit. You will move to step number 3, okay? Because with step number 3, you have written everything we have learned and understood and defined on step number 2 into a process, which will look like this. So here you have all of the sections, you have the chapters, whatever you want to call them. So this would be environment, this would be higher time frame, this would be the lower time frame, execution, risk. And then you have each step, step number 1, step number 2, 3, 4, and so on. Okay. Personally, my protocol is a 17-step objective step-by-step protocol. And this one is the execute. Okay. Execute. So it's like a maze, you could say, or like you can envision this like a map. It's guiding you towards the execution, which is the end goal. And again, all of these are the doors. So here, between every single step, you have yes or no. Yes, most often depending on how you frame the question, a yes will either let you go to the next step, or you will have to wait right here. And a good exercise actually for this is you make a flow chart like this, you print it out, you have it on your desk right next to you, and you have some piece. You can have a pen, you can have whatever you can find. I used to actually have a chess piece, and I moved it physically. That way, step by step, I always knew, like, I cannot execute a trade if my chess piece is literally on step number 5 in the whole process. It needs to go to execute. It needs to reach this step. Okay. And this, guys, like, this is the exact process that took me from 4 years of inconsistent results. And when I say inconsistent, I never had a profitable month. Inconsistent input took me 4 years. Okay. When I implemented all of this and learned how to use it the right way, I had my first, eventually, 5-figure month, as you saw in the beginning. And I'm so confident. I know that what I have in front of me is the exact same thing that will take me to having my first 50K month and eventually have my first 100K month. I don't need to change the way I'm trading for this. It's just about adding more leverage in a structured way. We don't want to scale irresponsible. We scale professionally, hence why this will take some time, okay? But I'm confident. I know that this will give me the results. This is a guarantee. The same way that you're guaranteed to lose if you don't follow your protocol, your edge, you are literally guaranteed to get results if the edge is proven and if you follow the steps you need to, if you follow the steps that your edge tells you to. Like, that is a guarantee, okay? So your only job, once you have this, goes from focusing on, I need to take trades, I need to do this, I need to do that, to literally just follow this. And I can promise you this, once you have developed this in a good way, your trading will become so boring that you will start to doubt why you even got into trading. But that's when you know that your process is dialed in and it's working. Trading should not be fun. It shouldn't feel exciting. It should be so boring that you barely don't want to trade. That's when you know that what you have is working. Because the only thing that you will actively focus on once you have reached this stage, okay? Once we are here, once this is you, okay? Here, you're smiling now. Once this is you, your only thing will become to optimize this whole process that you have, the whole protocol. It will be to optimize this, okay? It will be to improve it. Find steps that you can optimize, that you can improve to, let's say, increase your win rate, increase your risk reward, whatever it might be, right? And just refine it and continue doing the same things. And this is a complete different topic because, again, if you remember what I said in the beginning, this is also a process on its own. We can systemize and objectify how we improve and optimize our trading. I will eventually make a video on this as well. Today, the topic is how to make the first step, because without understanding this and creating this ourselves, we cannot go into step number 2, which is optimization, right? But that is what we will do eventually. We will learn how to optimize and improve and reiterate our trading, because I don't want you to just go out and guess how to do this, because there's a wrong way on how to improve your trading and there's a right way. If you do the wrong way, what will happen is, rather than improve your trading, you will just destroy everything you have built for yourself. And if you do it the right way, well, obviously your trading will improve, you'll get better and get better results. So by now, I hope you understand how you can start, or how we process our trading, how we make it into an objective structure, into a protocol, okay? And now I want to give you the action steps, because I don't want to leave you guessing what to do today. You will have clear step-by-step actions that you need to take in order to do it the right way, okay? In order to build your own protocol, your own process, okay? The first thing is right here. Gather as many trades that you can, that you have taken. Wins, losses, break-evens, all of them. Not try to make it look fancy. Gather all of them, okay? If you don't have many trades that you have logged, and first of all, if this is the case, if you don't log your trades, that is the first thing you need to start doing. No matter how, I don't know, tough it might feel to log a loss, you have to do it. Like this is a must. So this is the first problem. So you need to start doing this. But let's say that's the case for you. Use other people's trades. Find people, mentors, find traders, find trades, look at moves yourself that you like, that looks like, okay, this is a trade I would actually like to take. And you gather trades like this way, rather than taking your own ones. Since you don't have them, you use other trades, okay? So you do that. You take these trades and you do this, okay? You reverse engineer all of those trades with the 5 sections we talked about before. So let's say you have now 50 trades to look at. What is the common or the environment for the best out of these 50 trades? Okay, it's like this. Good. You define it step by step. Number 2, what does the higher time frame look like? And so on. Okay, so you do that for all of the 5 sections until you get to what? Until you reach execute. This step. Then you know that you have defined it properly. And again, I have to remind you, remember how to frame each step. It's a question that should be objective. We don't want to leave anything subjective. It should be objective, okay? That means that you can objectively say yes or no, which will open or close the door. Here's a practical example. Do you have a draw on liquidity? Yes, I have, or no, I don't. Or what is the draw on liquidity? I cannot say yes or no. Doesn't work. So you need to frame your questions in a way like this, because this is the beauty of this whole formula that we have created now. Because this is a formula, this is a framework, a structure, a system that we have built for our own trading. It is that now you will do this repeatedly every single day. You will become an expert at this exact thing, okay? You will not guess anything you do. You have it proven and you keep optimizing it wherever and whenever it needs to. Okay, and this is the exact way, the exact reason I was able to trade, and I am able to trade for less than an hour a day. Again, because I have the whole process dialed in. I know every single piece of my protocol. It's a 17-step protocol. I know every single piece down to the bone. And I know exactly how it looks on the charts, why I have them, and I can have the confidence to trust missing a move, because I know this equals money, and everything that doesn't look like this will, in the long run, yeah, you might miss a win, but in the long run it will mean lost money, because you want to become an expert at one specific thing. That's what it all comes down to. So now, after this video, you need to do this seriously. This will take days. It's a lot of things you need to do, and a lot of fine-tuning, a lot of studying, a lot of hard work, and hours looking at each trade that you need to do. It takes a lot to define each step, but this is what you have to do. This is what it takes to get to the level you want to. The other option for this is that you can send me and you can work with me one-to-one, just like Alex and Jacob did right here, okay? And I will help you implement. I will come into your trading. We will work together and we will implement this whole approach in one go and make sure that you understand each step on a daily basis. And we will tailor each specific thing that we can tailor, because some things is very personal. You might be able to tailor these. Together with me, we will tailor each specific thing, and you will learn how to move about this every single day. So there's no guesswork in your trading. So your only job becomes just trading. That is how someone like Jacob, who knew nothing, didn't know what a candlestick was, in just 6 months' time, he was able to get a payout of $2,000. Now the thing here is that he got it on his first ever funded account. He didn't blow the funded account, because what we will also do is we will, once we have the protocol defined, first of all, you will learn the prop firm strategy we have. Okay? And the prop firm strategy, first of all, how do we approach the EVAs, the challenge phases? And how do we, more importantly, approach the funded stage? Because with the funded and prop firm strategy that we will go over, it's literally, if you follow it, impossible to blow your funded account. Yes, it's impossible to blow it if you follow the strategy we have. Hence why neither Alex as well blew a funded account, and neither Jacob blew a funded account. And once you have this, well, do you remember what we talked about? Step 2 after this. It's about learning how to optimize your trading. Optimize your protocol that we built to make sure that you get even more efficient, get even better results. And I will teach you, and we will work together on how to do it the right way. Okay? And once we have this, the final step of your trading, which will be what we will focus on the most, because this will be the easy part. What we will focus the most on is this, the psychology. And again, this is a whole system and protocol that we will teach you. I will teach you a full structure to how you can map out your trading triggers, how we rewire your trading beliefs, and how we find how your childhood affects your current trading. Because this will be the daily challenge once everything here is nailed. This will not be the problem anymore. It will only be about this. And we have a full system and process for this as well. So if you want to work with me one-to-one, send me a DM on my Instagram that's linked in the description. You will find it right here. Send me a DM and I will see if I can even work with you, because I'm very selective with who I work with, and I only work with people who are serious about this. This requires a lot of time, a lot of energy, and a lot of commitment. So until next time, re-listen to this video, rewatch it at least once, and I believe in you. Okay? Peace out.